Hello everyone, good morning and welcome to today's market follow session. My name is Abigail and I'll be taking the first half of this session, which will be covering analysis on commodity currencies. Shortly after, my colleague is going to come on board and do his analysis on indices. All right, so yesterday we had the CPI data come out on the dollar and it came out lower than expected. This typically signals a little bit of weakness for the DXY, right? But it didn't really do much on the chart. It didn't really do much on the charts. Looking at the DXY itself now, starting from the monthly time frame, we see that price has been trading lower. As at Tuesday, we marked out certain levels that we're looking at price trading into. So I'm just going to go ahead and do a top down so you see how we're able to tell the story and break down the chart from higher time frames down to the lower time frames. So looking at the monthly time frame on the AUD on the DXY rather, I'm going to go ahead and mark out my most recent swing, marking out levels where I expect price to trade into, right? So this is what I have now, and in between this, I see an IOFED down below that could attract price to itself. An IOFED is basically having two fair value gaps that are very close or opposite each other. So I'm going to go ahead and draw that out right here. And you can see that price has now traded into this zone. We marked this out on Tuesday saying that there was a high possibility that price was going to be drawn into this level, and it has. So now that price is here, what is it going to do next? All things being equal, we want to see the DXY start to reverse or retrace. At the very least, we want to see retracement before we now see price continue downward. Looking at the weekly time frame, same thing, right? So same thing. There's a fair value gap that price left because of the force at which it moved. This moved too heavily, so we expect price to eventually come and take this imbalance, at least 50% of this imbalance before it continues to the downside. So what I'm seeing is this. There's going to be a reaction from where price is into the zone, and then we're going to be watching to see if price is going to be able to break below this level. So short term, I expect retracement on DXY. On the daily time frame, you can see that price has now or is currently in a support level. Price is now in a support level. So what happens at support zones? We should be retracement in confluence with what we saw on the monthly time frame. I expect price to retrace into the zone. And I'm also going to go ahead and fine tune the different points that I expect price to retrace into before it continues its move or totally reverses. So this is POI 1 and then this would be my POI 2. And just above that, there's also an IOFED right here. I'm going to go ahead and mark out. So these are now the 3 points of interest. Why am I marking out these zones? I'm basically saying that if price gets here, it should find resistance around this zone, fill this fair value gap and continue to sell. But if it does not, then we know that the next place it is headed to is here. And if not, this will now be the third point of interest. So this is an overall view on the DXY. Now that we have that in view, I'm going to now look at AUD and see what AUD has in store for us today. So very similar to what I did on the XY, I'm going to be starting my analysis from the monthly time frame and mark out my most recent swing. I'm going to go ahead and mark out my most recent swing, which is what we have right here, and mark out the next possible level where price is going to trade into, and then confirm my trend on the weekly time frame. So you can all see that predominant trend on AU is to the downside, right? AU is to the downside. So this level is still holding. I'm expecting price to trace into this zone so I can find a good enough level to start to sell AUD USD from, but this is on the higher time frame. On the daily time frame, what do we see? Same thing. So price was able to take out this structure point here. Price took out this structure point, but it is still all of this move I still consider a minor structure because it is still all within this zone. So I'm going to go ahead and mark it out so you can see the clear picture that I see. So because of all of these movements, this now becomes my major structure on AU, and everything happening right here is the minor movement. So as long as this structure point is not taken, that hasn't been taken out yet, this is still very valid. So price is now doing all of this. So there are people who could decide to buy AUD USD from where it is back into the POI. This is our monthly POI, by the way. But for following our trend, we want to wait for price to retrace into the zone. We could have caught this sell from here and caught a significant move downward from here to here, right? You can see how many pips it did. But if you didn't catch this move, that's fine. Just wait for price to retrace back into a key zone and then start to look for entries. For short term, what do we see? Going down to the 4-hour time frame now, this structure point, this is now our major structure, still very valid. And the minor structure, you can see the price is still forming lower lows. This seems like an equal high that was printed here. So two things, I want to see if AUD is going to either break above this zone, and once it does that, we know where it is headed to. It's coming all the way in here. And if it doesn't, then most likely going to continue its sell-off from where it currently is. But my perspective or my bias is still very much valid. I am still waiting for price to trade into my daily POI, and then I'll be taking advantage of what AUD has in store for me. So my bias on AU is a sell. I'm just waiting for the temporal buys back into my POI, and then I'll be taking that opportunity. Looking at NZUSD as well now, very similar price action that we tend to see on these two asset classes. Structure is to the downside on the monthly time frame. So I go ahead and mark out my most recent swing and then look for the liquidity levels in between them, right? And my Fibonacci level, these ICT guys call it OTE. So I want price to trade into a good enough zone so that I can start looking for entries. So price is here. I'm expecting price to trade into this level, and then we start to look for sell opportunities of NZUSD. On the weekly time frame now, to confirm my trend, you can see that it's pretty clear. Structure took out this zone, and came to trade into the support level, and you're seeing the retracement happening. So I'm expecting price to trade into this zone. Told you it's very similar to AU. And when price does that, we're going to be looking for sell-off opportunities of the NZD USD. Same thing on the daily time frame as well. This now becomes our most recent swing and our major structure. So as long as this has not been taken out, this entire swing is still valid. Price is now retracing, doing all of these minor structures in between. And that's why I mentioned earlier that there are times you could take the buys, right, into those sell structure points. And I'll show you what I mean. So we could go ahead and do something like this and mark out this zone, waiting for price to retrace into a 50 to 61.8% fib level. And once it does that, we confirm our entry on the 1-hour time frame, and then we're going to be buying back from here or here all the way into the daily POI, which is above here, right? But this is generally not considered a high probability trade. Your high probability trade is when you're in sync with the overall trend. So you could decide to look for opportunities and buy back into this POI, or you wait for the trend and everything to align and start to look for sell-off opportunities from this level. Perfect. So let me know if you have any questions so far. Is this clear? Are we together? Are we flowing? Please let me know before I proceed. Now, because we most likely will not be on the charts when everything aligns, our confirmation entry pattern is very simple. We simply just want to see a base formed on the 1-hour time frame and a continuation. So when we see something like this, we see something like this. This is for a buy scenario. We simply do the same for the sell scenario. See something like this and a continuation pattern. Then we simply look for our variation pattern and we'll be taking the buys. But for looking for the sell, you want to check out for the opposite. And what does that look like? It's simple. Confirm entries on the 5 minutes and then take that position. All right, so I believe our stance on AU and NZUSD are pretty clear. If not, let me know and we'll do a quick recap. So looking at USD CAD now, looking at USD CAD starting off from the monthly time frame as usual, what do we see? Structure, everything is showing upward, it's pointing upward, expecting temporal retracement as well. So because of the choppiness that this has, I'm going to go ahead and mark out this entire thing as my swing, waiting for price to now retrace into a premium level, which happens to be this zone right there. Waiting for price to come into a level that is good enough for me to start to buy low. Remember, when in trading, we want to buy low and we want to sell high. On the weekly time frame, structure is also confirmed. We're heavy to the upside, simply waiting for retracement downward. But you can now see that here we have a new swing. So we're going to go ahead and mark that out as well. Price should return into the zone. It came close, but it didn't really test this level. So price should come into the zone and we're going to be taking advantage of this. On the daily time frame now, the same thing as well. So you can see that all of this is still valid. Everything is what shows downward. Price is fractal, so whatever the lower time frame does, the higher time frame eventually catches up with. So yes, this is still my bias. I am bullish on USD CAD, waiting for temporary retracement, and I am bearish on AUD USD and NZD USD. Even looking at our forex performance of today, on the weekly time frame, you see that the financing currencies are what are currently leading, right? So what does this generally mean? Um, Oftentimes, investors tend to look for low-yielding assets and they hold on to this. And after we see this hold leading for a short period of time, eventually our safe haven assets tend to leave. This looks like it's giving signs of a risk or a flight to safety rather. It looks like the risky assets are being dumped, which you can confirm on the daily time frame. AUD and NZD are the weakest, and then our yen, USD, and CHF are the strongest. So you can see how they tally, right? On the weekly time frame, they are holding on to financing currencies. And after that happens, shortly after, you tend to see our safe haven currencies gaining strength, which is exactly what we see right here. Okay, so this is pretty much my bias. Again, one more time, I would implore us to pay attention to fundamentals as well as they play a key factor in the current market condition that we are in. So pay attention to that and also learn how to analyze that. If you're interested in learning how to analyze fundamentals and use them to make key decisions, simply send us a message on our WhatsApp number, which is 081 6099 5030. You should also be dropped in the chat box and you will be guided through. All right. Okay, so somebody said, please drop the number here again. All right, so we're going to go ahead and drop the number so you can contact us. So the number has been dropped in the chat box. Simply send us a WhatsApp message and you will be contacted or guided through on the path you want to take. So without taking too much more of our time, shortly after, my colleague is going to come cover his part on indices. So this is the time to let me know if you have any questions on our commodity currency analysis before we call it a wrap for this session and move into the next thing on the schedule today. Hello, Mr. Ayuba. I see you. Good morning, sir. Yes, sir. Mr. Obiezino, Mr. Oladipo, good morning, everyone. Let me know if this was at least beneficial to you if you do not have any questions. Good morning. All right. All right. Thank you so much for joining. Thank you. Good morning, everyone. Okay. So we'll be back shortly. Please do not go anywhere. You're most welcome to fly you back. Cheers and God bless.
Hello everyone and welcome back to the second part of this market color session. Thank you once again for joining. Today we'll be looking at the indices asset class, and by indices I mean the US 30, the NAS 100 and the S&P 500, S&P 500 market. All right, quickly we're looking at market shortly, seeing that we've seen a whole lot of sell-off in the market. We've seen a whole lot of sell-off in the past 2 weeks, right? And that's majorly because of the fundamental we have in the market. As we speak, it's still very dicey. Of course, yesterday we had the CPI news release, and it's in a way cushioned the effects of the overall sell-off we've been seeing across board, right? On US 30, NAS 100, and S&P 500, that was able to cushion the release. Majorly, what has been the driver of the market for the past 1 month now, yes, 1 month, that's the right word, has been the tariff plan, right? The tariff game that President Trump has been playing. That card has been very shaky in the market, seeing that we even see a sell-off across US tech company, right? Likes of Tesla. Tesla is already 45% down from year to date, right? So that's massive. That's really, really massive, very significant. And also we have the same thing happening with Nvidia, happening with Palantir, right? Because of what? The market has been responsive to what is happening and not in a very good way, right? So just yesterday or so, I read in the news again that tariff plan on Canada has been increased again. Just imagine, right? That's a whole lot of issue that's springing up. All right, but let's look at the technical part of things and then see if we can make sense of it. This morning on the higher time frame on US 30, we see that price has given us that break of structure to the downside too. We're announcing like a structure shift, right? We've seen a structure shift to the downside, which is very, very interesting. You have a structure shift to the downside.
Sorry, sir. From this end, we can't hear you and we can't see you.
Can you hear me now? Hello?
Yes, sir.
All right. Thank you. Sorry about that. So I was saying that currently what we have in the market, this price action we have in the market down is very suggestive that we are very bearish to the downside, right? And if this Fibonacci retracement will be respected, we expect that we see enough retracement that this bullish candle that is currently printing turns to a this bearish candle turns to a bullish candle and continues to the upside. If that is true, if that remains true, of course, it's not happening yet. But then, for any reason, we see that bullish move to the upside, then we expect that price to come to at least 50%, right? Equilibrium. We want to start selling from anything above 50% and then selling it to the downside. Selling it to the downside. We have a box strategy here, but then it's still very, very far from where price currently is. It's still very, very far, right? Something around here. It's somewhere around here. Of course, it's still very far from where price is, but then it's a possibility with US 30 because your price movement is really significant, really, really, especially once we have a fundamental that backs it up, right? But for this morning, on the 1 hour time frame, let's look if there's something really significant again that we might want to look into. Yes, there's something significant like a box pattern too, right? A sweep of this low and then price break to the downside, and then we're expecting that comes back again to tap this other block or this left shoulder somewhere around here. All right, somewhere around here, meaning price is going to push coming, meaning price is going to push like this, have a sweep, break, and then price is going to come here and then to start pushing to the downside. So this is another possibility in this market. And why am I considering this trade setup? Is because of the current team we have. The market has been selling heavily because of the primary driver, which is the fundamental from President Trump. That being said, let's move to the next pair on our list, which is the US 100. All right. Heavily, we've been seeing a sell-off. We've been seeing a sell-off across board, a heavy sell-off across board, which is quite significant. And I want to believe the way the market is moving, we might most likely even clear these zones. These are the next area of liquidity, right? So for what we have now, from what we have now, using our Fibonacci to do the analysis, we expect at price retrace at least 50%, right? At least price retrace in a way 50%. Of course, we've been seeing minor retracement, right? Meaning the price movement is really significant. Assuming we saw a sharp drop, right? One candle or two candles that give us this large move to the downside, we would naturally expect that, okay, there will be a retracement. But for every three candles dropping, bearish candle forming in this market, we are seeing a bullish candle retracing a bit. So it's a gradual intentional move, which is also significant, telling us something that sellers are really inside this market. Sellers are really offloading their position in the market and not necessarily a one-time stuff. We're seeing buyers are trying to come in, but then you can see the pressure, the sell candle are very, very significant. All right, that being said, on the 4-hour time frame, what are we looking at? Looking at the market is still very, very much bearish. We can see already this is another kind of a bearish pattern forming, like a bearish flag now that is forming, and most likely it's still going to continue to the downside. For those who understand patterns, you see what I'm trying to say, like a bearish pattern flag, right, being formed on the higher time frame. The rest assured, we are going to see a drop and then price continues to the downside again, right? Because we are heavily bearish. All right, that being said, which opportunity will I be looking out for today on US 100? In the 1-hour time frame, you have kind of a box pattern there, but this one is not clear. It's not clear enough. It hasn't given us that signature break of the higher low or higher high, previous higher high, and sweep of the recent higher low. We've not seen that already happening, right? Or we just have a break of the previous kind of higher high, and then there's no sweep yet. Price hasn't swept through what we have. So for US 100, you might just want to keep it aside and then just observe what is happening with this market, and then while we still stick with our analysis on US 30, because that is a very much better clear setup, right? Compared to compared to what we have on US 100. This is much better, right? So going to the last one, which is S&P 500. S&P 500 is giving us almost the same kind of setup we have with US 30. The only difference is that we have a clean sweep. We had a clean sweep on US 30. This was the previous I price swept through it, broke structure to this downside. We can see a clean break of structure to this downside, and then price is coming back to okay, so we can say price retested that zone, but not fully, right? Doesn't retested the other block and even the left shoulder. So we might expect that, okay, we see some level of retracement again. But if we don't see that, meaning price really has moved from the fair value gap. But on the S&P 500, what do we see? We see a sweep of the previous higher high, and what happened next? Price hasn't swept through this zone. See, can see. So since there's no sweep, we might just as well calm down and then leave it for now until we see a clear sweep to the downside before we can now start taking trade or start thinking about engaging this market. But in terms of intraday trade, what analysis is looking viable? It's the US 30 pair, right? So, and all of this is still, based on the fact that we still see enough fundamental coming in from the White House again. Once we have any issue or any information regarding tariff, probably a new country, so that for now it's Canada, Mexico, and China. If we have a new information on that again, that is probably they are increasing tariff again or giving a new country, then we should know that we are in for a sell, a proper sell again, another round of sell-off in the indices market. All right, that being said, this is the end of today's analysis. It's a good time to ask your question in the chat box. Let us know if you have any question in the chat box this morning. Is there any question? Do you have any question regarding the analysis? Let us know in the chat box. Was it helpful? Also, let us know before we call it a wrap for this morning, and then we'll convene by 2 p.m. exactly in the afternoon for the New York session. Do we have any question? Was it helpful? Let us know in the chat box. All right. All right. In the absence of no question, we'll be calling it a wrap, and we'll reconvene again by 2 for our New York market color session. Ensure you join, and of course, if there's any changes in the analysis being made this morning, you're going to be hearing about it in that session. All right. Thank you so much for joining, and see you by 2 p.m. Until next time. Cheers and God bless.